It's a new month here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, Ukraine conflict. With the Russian invasion of Ukraine, Western nations have responded with sanctions on several companies and individuals, culminating with the seizure of $600 billion in Russian central bank reserves. Since troops crossed the border, Russian equity markets have been closed and the majority of their largest stocks are down 95+%. Additionally, a number of large corporations have ceased operations in Russia, including Boeing, Ford, Nike, Disney, and McDonald's, among others. We will be monitoring, alongside everyone else, for some form of de-escalation, which should stabilize emerging markets and ease overall market angst. However, equity markets are not the only issue, as supply chains have been deeply affected, most notably commodities, which brings us to number 2, commodity prices. With what was already a tight supply chain in global commodities, the conflict in Ukraine has led to rapidly rising prices across the entire commodity space. Oil, natural gas, wheat, and nickel, amongst an assortment of other essential commodities, have seen their prices balloon in recent weeks. This is unwelcome in the current inflation environment, with consumer prices rising 7.5% and producer prices rising 9.7%. We will continue to monitor the commodity space for signs of easing in extremely tight markets. With consumer confidence currently subdued, further rises in input costs for goods and higher gasoline and food prices may crimp demand and tip the global economy into recession as buyers and businesses tighten their belts. In navigating this high inflation environment, the Fed will play a significant role, leading to number 3, Fed meeting. In just a few days, the Fed is expected to announce its first rate hike since late 2018. This will coincide with further balance sheet reductions from the Fed as they tighten financial conditions. It will be important to watch the commentary surrounding the path of rates and the level of uncertainty in interest rate policy into the end of the year. Following the prior meeting, markets were expecting a 50 basis point hike, effectively 2 hikes, at this coming meeting and 6 hikes in total by the end of the year. With higher economic uncertainty, markets have reduced the forecasted trajectory of interest rates, now seeing only one 25 basis point hike at the coming meeting and roughly 4 hikes in total in 2022. Keeping an eye on Fed commentary will be crucial to determine the balance between maintaining economic growth and controlling inflation, and could be significantly market moving for U.S. equities. And that's been your Market Minute for the month of March. Thanks for listening.